Good morning, traders. I want to visit with you a little bit about my hypos for this week. I want to look at last week just briefly here before we move on. If you looked at my hypo video from last week, I marked out the consequent encroachment or 50% retrace of last week and theorized that we may attack some relative equal lows on the 4-hour chart, which it was these right here. And we did just that. We worked into this 4-hour fair value gap, but we did not make it all the way to the 50% mark. Once we completed that daily objective, then we went up and we made an all-time high again and then consolidated a while. And we came back down and we took out these relative equal lows. And look how it's bouncing off of that 50% mark. Here we surpassed it, then we came back to it. We came back to it again, creating relative equal lows. And then during Asia session, Thursday evening, we had some news, which I believe the news is only there to move the market where big money wants to buy. They don't want to buy up here at the top, but they would buy below the 50% mark of last week. So it falls out of bed, takes out these lows. Big money gets their order in. It immediately retraces. We tried to push lower again during London. We ended up making a reversal and we came back up. So that's where we sit going into this evening. This would be Friday's settlement price, which I need to mark out. Okay. So just based on that PD array, let's just take out the lines for a minute. We don't have any frame of reference. And just maybe you say this is a 1-minute chart. Okay, so our highest point is here. From a four-hour perspective, our breaker would be right here. Put all my lines back on. Maybe I should just look at it without all the lines. So we would need to start trading below this and put a fair value gap to the downside, possibly trade down into here to these wicks for us to have some bearish movement. Maybe we take these out and then go back up. But we would need to get below that level and start seeing some pretty serious moves. That's 22,867. Start seeing some fair value gaps to the downside to come take out these wicks. Will we do that? I don't know, but that is a possibility. Let's get rid of that. Hide these lines again. Another possibility is we've offered lower. This little PD array right here, it's pretty common those get revisited. If the green wick was lower than the red one, like here, how that wick is lower. Here we had a lower and a little higher, so we revisited it. This to me looks like it needs to be revisited, and we haven't quite filled in 50% of this fair value gap. So we could come and revisit these and then push higher because we are overall bullish. Once we did get up here, things kind of got a little choppy, but I mean, that's a pretty bullish move up to the all-time highs. And then we've kind of been consolidating. Price is trying to decide what it wants to do next. I would like to see a pullback to this level. That would be ideal. We do have a fair value gap here, and we have one here. This one might have been, let's look at the lines again. It might have been traded through already. Yeah, it did. With this wick right here, we made it all the way through this fair value gap. So I think this one might be done. I don't know that we'll come all the way down here again. But this one, and trading all the way down to this level, 22729.50, is a very high possibility. We need to paint that wall. So I'm going to mark that. Well, it's already on there. I'm going to leave the fair value gap on there. So, oh man, I deleted the wrong one. I'll have to put it back in there. So the fair value gap runs from the bottom of this wick right here to the top of this wick. We've only offered buy side during that time frame there from a 4-hour chart perspective. If you go to a 1-minute chart, there's probably a lot of red candles in there. But we haven't made it to the 50% mark. And we've left this portion of untraded. So this quadrant could be filled in with a wick and still remain bullish. This little setup here, we did take out the low. So we took these out, we pushed there, took out that low. So we could not trade down at all and just start offering higher and start taking out the all-time highs again. That's another hypo. Once we took this one, we did kind of pull back, but then consolidate, and then took it again, pulled back, not quite as far. So we are making higher lows. In order for us to be bullish well, we just have to start taking out those highs for sure. I really can't mark a PD array. I would say if we just took this little section right here, and we said this is the low, the run on liquidity here, then we would mark this green candle as our potential bullish breaker. And from that perspective, we did have candle bodies close above it, but then we violated it. So pushing down to this level, filling in this is what I would like to see happen. I know big money wants to buy below this yellow line. That was the 50% of the week prior. Let's see where 50% of this week falls. So that's the entire candle of the week. It's going to be a little different. I can just move this line right here. 50% of the last week. Right there. Okay. And I'll get rid of that fib measuring tool. And let's go back to the daily. Okay, there we go. Let's go to the 4-hour. Okay, so we're sitting right at 50% retrace of last week. So these wicks all hit 50% of the prior week, and this one is sitting right at it. The second half of Friday it never left the high or the low of that 4-hour candle. We could just pop down into this low of the 4-hour candle and then continue up, or we could trade down into here and then continue up. We would certainly still remain bullish if we did that. I think if we come down into this area, then we're going to see quite a bit of pullback. Possibly all the way to this level. That's really nice straight line there. So we could pull back all the way down to this if we start offering lower and we start taking out these wicks. So we can watch for that. There's a fair value gap here, and there's one really nice one here and here. Could we offer that low again? Possibly. It just depends on if we break this level, then we could see more downside, or we could see a whole lot of consolidation like we have here. So what I would like to see happen is we fill in this fair value gap and then start offering higher and make it all-time highs again by the end of the week. So that's my hypo. I would like to see it trade down into this, fill in this entire fair value gap, and then start trading higher. Preferably open lower for Asia, and then by Monday or Tuesday fill this in, and then we just start offering higher. That's what I would love to see happen. I listened to a video today about macros and trading with the trend and intraday stuff, and it was talking about like sizing up and stuff. When the trend is bullish, which overall has been bullish. We got into chop here. We were in chop here, but overall the trend is bullish. Whenever you're taking a short, you don't want to take your max size. But when you're taking a long, because it is with the trend, it's okay to size up on that. So I am going to employ that strategy this week. Last week I did pretty good, but I was still taking a lot of impulse trades. For some reason, I'm always thinking Asia is going to be my savior. And so I always put on a little trade, expecting for one of those huge runs. And I looked up, I have a program where I can just section out just Asia. And it doesn't happen that often that it goes on a big run. It does occasionally, but it doesn't happen very often. More times than not, it just ranges. Sometimes it'll be a big range, but more times than not, it ranges. And that's where I usually lose my money. I might kick off a trade in Asia and just let it run for 3 or 4 hours and see where it goes. And I did that on Thursday, and it actually worked out in my favor. But typically what I've been doing is trying some of that and then failing. And I'll start the day $300 or $400 in the hole. And then because I want to make that money up right away, maybe I take a trade with a little bit more size and lose again. Maybe I do that in pre-market. And so when the market opens, I'm down $800. That happened almost every day last week. But I ended the day profitable by at least a little bit every day last week, except one. There was one day that it was Wednesday that I'd gotten up and I'd been out the night before. I only had 3 hours sleep, and I made a bonehead move and got $1,000 in the hole within. I actually got $1,500 in the hole within the first 15 minutes of the market open, which I don't even trade typically. And so I was at risk of blowing up this combine. And then took one more trade on a reversal pattern that was good. It was a good trade setup. The other one was not a good trade setup. It was a pure gamble. And so I take one on a good trade setup and it fails. So now I'm $1,700 in the hole. And saw another reversal pattern come up, took it. It was bullish. I took it, and I was able to make up $1,100 of that loss, that $1,700 loss. I ended the day $400 in the hole. So overall, it turned out to be not as bad of a losing day as I expected it to be. So can't complain. When you make a bonehead move, best you can do is not panic. Go back to trading your system and dig yourself out of that hole. So I'm sitting $1,500 away from getting funded on this combine. Hopefully I can get it this week if I can keep from making any boneheaded moves. If we can do this hypo where we come and take out the rest of this fair value gap and then start offering higher, that would be my most confident type of trade. And if I can just be patient and wait for that to happen, or maybe we just take out this low right here and then continue higher, I'd be confident in a trade there too. But ultimately, just trading these reversal patterns, there were some really nice ones on Friday. If we go to the 1 minute, I can show you some of those reversal patterns. This was a pretty rapid run down. Our reversal pattern was actually, this is our breaker right here. And the fair value gap associated with it was the big green candle right above. So that would be the breaker. And then the fair value gap was right here. And so you could have gotten in here. I don't think you would have got a fill because I like to put my stop just a tick above this candle's low, and it would not have gotten filled. But we also had a bearish, so you could, with small size, enter bearish and we came down and we went into this fair value gap that was created after that breaker. That was the first breaker of the day as well. But you can see we came down here and we went right into the center part. Candle body's respecting it. So you could take a trade right off of that, and I did. And I was trading a little bit cautious on Friday, only using micros, 3 micros max. And I was managed to have $1,000 day. Once we made this run, I think we took out this high. That's when we started chopping, and it became an inside day after that. This is when things got really dicey, and I locked my account right after lunch. I was like, when there was one here, and I was like, okay, well, once we started pushing higher, we needed to respect a certain fair value gap, and it didn't. So I was like, okay, that's it. I'm done. We're in money stealing mode now. But yeah, Friday was a decent day to trade. So hopefully this week I can keep my head on my shoulders. I don't wake up in the morning and do something stupid, and I can get this sucker funded pretty quickly. And I am real cautious with using anything other than micros right now, because we had a couple of weeks where the PD arrays were just failing. And last week, the market seemed to return to normal. Okay. But even on those weeks, like rollover week, where the market is trading, it would put up a PD array, but instead of running the average of 90 points on the first one and let's say a 50 point in the afternoon, instead of seeing that, we were seeing 20 point runs and then go to the moon, and then with no PD array at all. And so during rollover week, a strategy might be that we just grab the lowest of low hanging fruit, like we grab 10 points or something, some static take profit. I'm going to be in the market for 5 minutes or less, and I'm going to just grab 10 points and be done with it. That might be your better strategy on weeks like rollover in the following week, or just avoid trading it altogether. I managed to keep the combines through all that trash, but it was rough. It really was. And I'd just gotten done doing all my back testing. I had what I felt like was a really good idea of where I needed to take a trade, what my profit target was, and all of this. And then we go into that little 3-week period, the week of rollover, the week after rollover, and then we went right into 4th of July holiday week. Those 3 weeks, if I put those into my back testing, the average after a reversal pattern would go way down. So I didn't even put those in there. So after all that hard work, I was seeing my strategy not working out as far as take profit goes. The take profit was still there if you did 10 to 20 points. It just wasn't doing the 90 points that I was used to seeing in all of my back testing. So just consider that when we get close to rollover, which we're good. We'll be good to September, I believe, is when the next one starts to roll. Yeah, that'll be September. We'll start to roll into the December contract. But I hope everybody's doing well. I have been doing some live streams. When I listen to them, when I go back and listen to them, they're real quiet. So I'm going to try to get a microphone before I do another one. And I don't like for them to be 3, 4, or 5 hours long. So I'll probably just get in when I start to see a trade set up. What I typically do is just I'll mark these 4-hour highs and lows, and I'll put an alert in my phone so I don't have to just sit here and watch it the whole time. Maybe I go mow the grass or something. And then once it starts getting close to hitting that level, like I'll put it above. I won't put it right on the level. That's 22,854. So I might put one at 22,865 or something. And so when it hits it, I can come in here and watch. and then it wicks down through it. I look for my reversal pattern, and that's when I enter my trade. And that works for me, because every second you're sitting here watching those candles bounce, you're tempted to enter a trade, and that requires willpower to stay out of the trade. And your willpower is exhaustible. Just think about when you're dieting, you've done good all day and then you blow it at dinner time. Your willpower, you run out of it. It takes energy to avoid doing something. So if you can get yourself away from the charts while you're waiting for a trade setup, that'll help you out. It's been helping me out. So on this, like if I was going to do this, I would put an alert to let me know when it's getting close to this high and this low, because I want to see one or the other of those taken out before I look for a trade. So maybe that'll help you. Remember to be kind to yourself, be kind to one another, and remember this strategy. If you're going to trade like me, you're a reversal trader, and you only take trades at higher time frame highs and lows, and only when a reversal pattern is present. Until next time, trade well.